Good morning, it's Alex with your Main Street briefing for Wednesday, July 8th. Today, the Fed sits still again, why SBA loans just got interesting, and the cash flow problem underneath all of it. 3 stories, 5 minutes, done. The Federal Reserve is holding the line. The FOMC kept its benchmark rate at 3.5 to 3.75% at its June meeting, the 4th hold in a row, and the prime rate sits at 6.75%. Why it matters to you? If you were waiting for a rate cut to refinance or borrow, that cut isn't here, and the Fed is signaling patience while inflation runs above 4%. Every variable rate line of credit you carry is still priced off that prime rate, so the interest you're paying today is roughly the interest you'll pay this fall. Planning around a cut that keeps not arriving is how businesses get caught short. The smarter move is to build your budget on rates staying exactly where they are. What to watch? Pull the rate on every loan and credit line you carry, and if anything is floating above 10%, get a fixed rate quote this week so you're not exposed if the Fed holds even longer. Here's the part that doesn't make headlines. Borrowing is actually more affordable than it's been in years. SBA loan rates have held steady since the Fed's last cut in December, and they're now the lowest they've been since 2022. SBA 504 loans are landing in the 5 to 7% range, and new small business lending rose in the first quarter compared to a year ago. Why it matters? While everyone waits for a cut, the affordable capital is already on the table, and other owners are taking it. If you've been sitting on an equipment purchase, a build-out, or a refinance of high-interest debt, the math on an SBA loan right now is better than the credit card or the merchant cash advance you might reach for instead. The catch is that SBA paperwork is slow, so the owner who starts today closes months ahead of the one who waits for perfect conditions. What to watch? If you have a real growth project, get pre-qualified with an SBA preferred lender this month and compare that fixed rate directly against whatever short-term financing you're currently using. Underneath the rates and the loans sits the real issue, and it's cash flow. 3 in 4 small businesses named cash flow management their top challenge for 2026. And it's not because they aren't profitable, it's timing. Tariff bills, payroll, and inventory all go out before the revenue comes back in, and a refund or a busy season 2 months away doesn't pay this Friday's bills. Why it matters? A profitable business can still run out of cash, and that gap is what pushes owners toward expensive emergency borrowing at the worst possible moment. The businesses that stay calm are the ones that saw the tight week coming. What to watch? Build a rolling 13-week cash flow forecast, update it every Monday, and the first week your projected balance dips near zero. Arrange your financing then while you still have leverage and options. That's your Wednesday briefing. 3 stories, done. Go make it count. I'm Alex, and this is Main Street Briefing.